Hello, and welcome to Electrifying Growth, a podcast brought to you by Edison Partners. I'm Chris Sugden, the managing partner here at Edison and your host. There are moments in a person or company's journey that are undeniably electric. The spark or sparks, if you will, that propel you or your company to new heights. With Electrifying Growth, we're here to have in-depth, real conversations with great leaders who have been there and done it before. Edison has been investing in high-growth technology companies for more than 35 years, and I have been here at Edison doing this investing piece for more than 20 years. We've led over 225 investments. We understand that it takes great leaders and visionaries to build market leaders. We are your support system, a CEO and management's entourage, if you will. Let's introduce this episode's guest.
Hello, on this episode of Electrifying Growth, we're talking with Cam Doody, a founder who's made a career out of betting on grit, speed, and high leverage thinking. Cam co-founded and scaled a national moving service called Bellhop before launching Brickyard. Brickyard's a venture studio built for real builders. As you'll hear on the episode, we're talking real builders. Cam has been in the trenches and knows what it takes to go from 0 to 1. At Brickyard, he and his partner Matt are creating an environment that strips away the noise and helps early-stage founders build faster and more sustainably. No hype, no distractions, just the hard work of building companies that last. It's a different model in a world obsessed with scale at all costs. As he likes to say, from zero to product market fit is the goal. Cam brings a raw and practical point of view on what founders really need in their early days, why conviction beats consensus, and a design for deep focus in a world that's constantly trying to pull you in every direction. Whether you're building your first company or looking for a better way to back founders, this episode, I promise you, is full of clarity from someone who's walked the walk and helping founders every day. Cam Doody, welcome to Electrifying Growth. Thanks for joining me today.
Pumped to be here, Chris. Thank you for having me.
People claim I have a lot of energy, but I think you taught me in many respects. And I'd like to start with, which I almost always do, a little bit of background. You were an operator, an entrepreneur before you were an investor. As your intro said, you're now on, I like sometimes to say the dark side, the investors of the dark side sometimes, but you're actually doing some hard work too as running a place for startups to go to really collaborate. But tell us a little bit about the early days of Bellhop and others and get us forward to Brickyard if you don't mind.
So 2012, we started a company called Bellhop, which ultimately ended up becoming, today we're between third or fourth biggest local and regional and now long distance mover in the US. But it started as we thought we had this giant idea of we're going to change the way the college kids moved. And it was right when the iPhone started being, college students' pockets. And we knew we could manage a workforce through mobile. You go to any college campus and there's 20,000 athletic college students that are broke, and then another 20,000 college students that have trouble lifting a futon up 3 flights of stairs. We figured that we would just aggregate the labor and then combine students to move students, and then pretty quickly turned into us moving their parents and then rolling out a full service moving option where we kind of redefined the logistics model in moving with an asset light approach. And it took on a life of its own. And we spent about a decade building that before we sold part of the company to private equity right before COVID.
Amazing. And I can attest, as when we moved to Tennessee, we actually called Bellhop to help move stuff around our own house. And it was awesome service. But to your point, you were ahead of the mobile, and maybe it was ahead of the mobile. You're ahead of the on-demand. You dropped asset light. Like everyone's going to know what that is. I think most people do. But just talk a little about a few of those trends. Were they all obvious to you? Did you and your co-founders, have to figure a few of these out on the fly?
We could talk forever about this, but yeah, the asset light approach came out of necessity. We started moving college students, then we started moving their parents in and out of U-Hauls. And then their parents started asking us, hey, we don't want to have to pick up the U-Haul. Can you do that? And so we started booking U-Hauls, and then our captains would go pick up the truck and then do the move and take the truck back. And then, we were breaking all kinds of state regulations around storage, and we started getting cease and desist. And then we started jumping through the regulatory hoops, and then we started leasing our own trucks. And then we were having trouble training drivers, and kids were wrecking trucks, and so we ultimately went to this guy in final mile logistics that had scaled a company with about 7,000 or 8,000 of these 26-foot box trucks. And he worked for Amazon, and they only worked at night from midnight to 5 a.m. They'd take it from, Amazon distribution centers, UPS warehouses. And we went to him to ask him questions like, how do you maintain these things and keep them clean and train your drivers and do fleet management. And he was like, he stopped us and he was like, why don't you just onboard my drivers as your bellhops, and then we'll handle the trucking side and you can do all the moving and loading, the packing. And we were like, okay, we'll try it out. And within 6 months, it had taken over every move of ours in like 40 different cities.
So there's a little serendipity in all entrepreneurial journeys. Like you went for advice and you got a solution.
Oh, for sure. I mean, luck is a major role with a capital L in this space.
100%, 100%. Now, the Southeast, I'm going to talk about geography, Bellhop. If I have it right, you founded in Birmingham.
Yeah, we did. We were living in Birmingham.
Tell me a little bit more about that. Was that intentional? You're from there, but I mean, and I say that because we'll get onto the region that we're fond of saying is just bursting on the scene. But talk a little bit about your own kind of geographical ties and why Birmingham, because that's not necessarily considered startup capital of the world.
No. Well, my co-founder and I graduated during the middle of the financial crisis. And so we went in, and a lot of my friends took a year off, and I just couldn't. I just had to do something. Nobody was hiring. I took a job at a retail bank, and I was like, a step above a teller, like repinning people's debit cards in a mall parking lot. And that was when I was like, okay, I need to take this thing seriously, and or I'm going to be on this corporate train for the next 40 years, and I'm going to slowly, die. And so I was almost scared into it. But I knew that I needed time independence. Freedom is like my core driver. And so we just started thinking about ideas, and we're close to Auburn University, and that's where we initially piloted Bellhops. That's how this whole thing started. It was just sort of a, wake up call of, okay, I've got to figure out how to get out of the Peloton.
So you threw out, we sold it to a PE firm or part of it right before COVID. Was that a better lucky than good story as well? In other words, was it time such that, or was it actually too soon because COVID ended up people moving a surprisingly different volume? Kind of just talk about the exit or the partial exit as to timing.
Well, I mean, it was for personally, it was great. It was another capital L luck event personally, but the company was in an exceptional spot. Late 2019, we were on like a $80 million run rate, growing 150% year over year. And COVID happened like 5 months later. And the last 5 years in the moving industry has been the worst 5 years in history. And it's been really difficult because in 2020, the demand went away during the lockdowns. And then in 2021, with the stimulus checks, nobody was working. So we were supply constrained. And then 2022, 23, the Fed rate hikes, basically like stopped all home buying. And so we're demand constrained again.
The housing market itself has been a disaster. Yeah.
I mean, this year was the worst year in moving since like 1960. And
in 24. Wow.
Yeah. So, but we still serve on the board, and we've done a great job of navigating it, but it's been a different stage of the journey for sure. So yeah, hopefully we kind of see the light at the end of the tunnel. Hopefully we've got a White House that's very focused on lowering interest rates and, trying to get stuff back on track.
So now we, here we are, you've sold that to a PE buyer, someone else is running it, and you got this, okay, what am I going to do next? And I remember running into you very early, probably not early for your vision, but early in the space you're sitting in now. So that brings us to Brickyard, which by and of itself, you'd almost expect, I was like, Indianapolis, with these guys, did they drive cars? Like, because I wasn't from the Southeast. But all that being said, tell us about where you're sitting and taking that true vision to reality.
Yeah. Well, all right. So Brickyard, we're a pre-seed seed stage venture firm, but we're a pretty odd bird. I mean, we are a very odd bird in venture. And, what we do is we bought this building, and our intention was ZERP had caused some major obstacles for early stage investors because startups became this like pop culture thing.
Yes.
And so it really widened the top of the funnel. And so you had
everybody's doing it. Right.
Everybody's doing it. The materials and the accelerators and everything, all the depth of the industry grew so much that it became really easy to fake it. There's all kinds of programs that teach you how to talk like a founder, look like a founder, present like a founder, talk about, the right metrics, et cetera. But like, as you know, at pre-seed and seed, it's like, do you have that dog inside of you that is going to allow you to go to war for a decade? And that's what we're looking for. And so we wanted to create this like very inconvenient thing. And so Brickyard, every check that we write, these teams are coming from all over the world to put the blinders on. So if we get to a term sheet with an early stage company, they know from the first meeting that we took with them that they're moving functionally to the middle of nowhere in Chattanooga, Tennessee, with regard to tech, to weather the trough of sorrow. And that's a stage in startups that is just brutally difficult. And our perspective is the only way, the best way and the fastest way through the trough is through brute force. It's like hours in. And so teams are coming here to simplify everything in their life and go to a place where they just have one thing to do. So we made 44 investments now, and we have 16 companies inside of Brickyard every day. These teams, there's no programming, there's no demo day, there's no standing meetings with these teams. It's just, adults, serious founders that are coming here to put in 100 hours a week and go really fast.
So you guys have a giant mural. Almost want you to walk me back to it because I love it. But it's sort of your motto, because you use the dog, which I think is a good one too. But just share with the audience here the motto.
Yeah, like if you want to get a company to product market fit, you have to burn the ships, and that burn the ships is that's the mantra of Brickyard. You are functionally leaving everything in your life behind to go to a place where you just have one thing to do. And so we have this big mural that we had commissioned by an awesome local artist. The story of it is if you want to go in one direction, you remove your plan B, right? So you sail across the ocean, your boats hit the shore, you light those things on fire because you're not going that way. You're going that way.
Love it. And you're right. Seed and pre-seed in that really early, you have no choice, because if you give yourself a choice, there's some degree in this space we invest a little bit later. That's not always the case, right? Because you're hiring people from other companies. The companies are there. Here, if you have a plan B, it's way too easy to quit along the way. And that's always connected for me. So you're bringing people to Chattanooga, Tennessee,
yep. Which,
full disclosure for the audience, some of my story. I moved down there. Cam discovered it way before I did. We found it through COVID, our family, but it may be a hard sell for some. For those who love the outdoors, it's an easy sell once you get them there. But talk about why Chattanooga, other than you and Matt love the city.
Well, if we did Brickyard in the Bay, right, just to use one example, there would be no sacrifice. There would be no burning the ships. You would just be going, instead of going to the WeWork, you're going to this co-working space. And so I think it's impossible to do in any of the established markets to really accomplish the mission that these teams are coming here to do, which is like put the blinders on and lock in. And so Chattanooga really kind of plays a strategic dynamic in our fund thesis, in that if you're into the hype and the status of startups, more so than just being a neurotic founder that wants to build a multi-billion-dollar company, you're not coming to Chattanooga. You're going to want to go to the parties and the networking events and all that stuff. And, that can be helpful for the right types of founders that are good at playing that game. And it can be helpful for teams later on in their journey. But in this stage, our approach is we attract a very specific type of founder that's hard to fake and put them in an environment.
I've made the case to many that the Southeast is still a bit undiscovered. You knew it long ago, back to your Bellhop days, as you indicated. Are you finding you get the founders there, they get the product market fit? You can't really generalize because the sample set's still fairly small, but getting bigger. Are they staying? Is talent hard to get? Kind of what's the biggest challenge in a step after yours to either retain and or grow the companies in the Brickyard?
Well, we make all the sense in the world for teams prior to product market fit. Once you're at product market fit, now you have to start thinking about, you're building an org. And so you're scaling headcount, but our job is to get teams there. Right. And so when you're prior to product market fit, you're not scaling headcount. And so you don't need to be in a place that has a bunch of talent density, especially in today's day and age where you can hire remotely. It's more like, how in tune can you be with your really tiny team?
Well, how low would you say? Is this a 4-quarter, 8-quarter, 12-quarter? What's your timeline that you talk to your founders about?
Teams come here. The minimum buy-in is there's no time obligation. The minimum buy-in is you're coming here to get to $1 million in run rate.
Yep.
And many of our teams stay to 2 or 3, right? On average, our teams are here for about 2 years. And so in terms of like retaining these teams, we have nothing to do with economic development. This has nothing to do with
pure profit and help entrepreneurs mode, right?
Yeah, exactly. And so what we say from day one is like, when you're ready to go, we'll drop what we're doing, and whatever direction you want to go in, we'll get behind you 100%. But we've seen about a fifth of our teams that have decided to keep a presence in Chattanooga, whether it's their, sales unit, or, if it's a supply chain logistics company, we're super heavy here in that. And so some teams have headquartered here, but that's like a byproduct. Like, if that happens, great, but we don't push that.
It's gravy, cherry on top kind of thing, not the need. So of all the spaces that I think in terms of stages, what you do is the hardest. First of all, finding that team with the grit, which we're going to come back to, but why that stage and not something else for you as a person who had some options to do something next?
So the fund that wrote my first check was called the Lamppost Group. And if you've ever watched Lost, the TV show, it's about a bunch of strangers that get marooned on an island, and the whole, there's 6 seasons. The whole thing is about how do we get off the island? And so as a founder, so you start a company and you're like, how do we get this thing to an exit, right? And when you finally do get to an exit, you realize, and the same thing happened in Lost, is like they figure out how to get off the island, and what do they want to do when they get off?
Go back.
They just want to go back to the island, right? And so the early days, the first 800 days, 1,000 days of building a company are like a drug. And once you've experienced it, even if you're still building your company and your growth stage and everything is going great, you still desire the drug, right? Of the early days, where you're not optimizing some metric by 2% month over month. It's I want to get back to where we're changing asymptotes on a monthly basis,
Literally changing your world, if not the world, right?
Right. It's all acceleration. It's the drug is acceleration. And so there's nothing like going from, 0 to 5 million in ARR. That's a wild time.
Love it. But it is, and I remember, I've been in this business way longer than I ever imagined, over 20 years. And I remember the founder of the firm, which we now own, and we've gone through a succession from our founder, but I asked him, so what's the team like, the team dynamic? Because I find the same thing, having been in the operating side, being part of that team is just special. How do you get that? I hate to use this, we're going back to we're talking about drugs, but it's a good example of a high. The high of taking the hill, taking the next goal, that aha moment as a startup company, like you said, going from 1 to 3 to 6 to whatever. How have you filled that, I say void? I'm going to guess I could tell with lots of Brickyard teams, but talk about,
we get to wake up every day and come to a place that's filled with founders that we deeply believe in and personally connect with, that are in the most exciting stage of their company building, in my opinion. And so being able to do that every day, not just for us, but it's for every team here. You come in here and the gong is being rung 2 or 3 times a day as customers are closed, and the momentum of being around a bunch of people that are all in roughly the same stage, that are pushing.
Each founder team is your team, is what you're telling me.
That's what it feels like. It's like I have the greatest job in the world.
That's awesome. That's awesome. So how hands-on or hands-off are you? Are you guys, you're writing small checks, providing space, guidance, other founders around? Is that mentorship, the collaboration is huge, but what are you guys doing day to day in terms of helping the companies?
So to give you an idea, we're writing $300,000 to $600,000 checks into usually $750,000 to $1.5 million rounds on average. Yep. And so we're a part of the first raise. But what we tell all our founders is we never want to be getting into the strategy of any of our teams. These companies change so much within just the first year of us backing them, that any great idea that I have is almost certainly built on poor assumptions. And we just don't have the context that a founder has that is spending every waking moment dreaming about the problems in their company. And so we like to stay tactical. So we don't have any standing meetings. There's no formal programming whatsoever. We're not pulling teams out to go to workshops. We don't even like to do cocktail hours or anything. This is just an execution house. But we're constantly getting pulled into rooms hey, how do we negotiate these term sheets? How do we close this first engineer? How do we think about building an early org structure? We're very tactically active, but it's more in 2-minute polls,
Yep. They're tapping you on the shoulder saying, hey, can you help me with?
Exactly. Yeah.
That's awesome. That's awesome. So in some ways, back to that high, you're getting it literally every day. You might get 10 of these interactions or more by 5 different companies.
The thing that really blows my mind about being an investor is just the massive amount of context switching that you have in any one day. Like I get home and I'm just exhausted. Yes. It's minute to minute. I'm thinking about this and then I'm thinking about that. And then I'm getting pulled into the room. You know, it's a lot.
Let's talk about, I use the term vanity metrics. Like we like to invest in real companies. You know, talk to me. ARR is interesting. I want to talk about GAAP revenue. It'd be nice to even talk about earnings if we can. Real customer metrics, real CAC, real LTV, et cetera, et cetera. But you're actually trying to assess grit, want to, not vanity metrics, not I'm hanging around with the cool kids, right? Like I'm doing hard work. So how do you guys do that? Obviously they're willing to move. Okay, that's certainly a big deal. But what are you doing along the way to figure out, you got top of funnel, you got middle of funnel. How are you guys assessing the grit?
Yeah, well, I mean, there's one rule at Brickyard. There's only one rule, and that's you post your numbers. And so we have a board in the middle of Brickyard that's like a top gear style, like magnetic strip board, where every month when the numbers come in, all our founders post their numbers for the last month's revenue and the months before that. And that board's constantly switching. And as new teams come into Brickyard, you're kind of starting at the bottom of the stack and you're seeing the teams that have been here for a couple of years. And it, you know, you can just watch like these founders, every founder that walks by that board is like looking at it and it boils their blood.
A little healthy competition never hurt is what you're trying to tell me.
So good.
But they're already here. How are you thinking? You meet a team from the Northeast and you're trying to figure out, am I their last resort? Why does this team want to come to Chattanooga? Am I their first choice? Well, all those things are going through your mind, but really you're also trying to figure out once they come down, are they going to stick it out? What are you looking for?
Our process is pretty unique in that the first 4 or 5 calls that we have with the team, it's all virtual. The first 10 seconds of any call, I say, look, Brickyard's not for everybody. It requires a lot of sacrifice. It's super inconvenient. You have to come to the middle of nowhere for this. When you come here, there's one thing to do. It's a super competitive environment. The fact that they even take a second call from us is like they're stylistically aligned with our style of building. But once we finally get a team, when we get to the point where we're ready for a final meeting, you know, our partner meeting, we fly the entire team in and we spend a full day with them. And we go into a room and we basically spend like 4 or 5 hours, like talking about their company, rehashing everything that we've talked about virtually. But now we get to see these co-founders like interact with each other in person and answer questions in real time. And we kind of we have a round table in our conference room and it's like a bunch of founders that just get around a room and we can see how they think. And then that same day, we're either offering terms or we're passing. And about 40% of the time, we're still passing. And it's almost never about something that, you know, that we uncovered about the business. It's almost always about some nuanced dynamic that we can pick up on in, you know.
I feel like they're just not going to have the get after it. Interesting.
Exactly.
There is, so the point is there is some gut, pattern recognition, of course, but there's some gut here too. Now, I know you have a co-founder, Matt Patterson, but are you and just Matt sitting there? Do you have advisors, other investors? Where are you going to figure out if you got something better than just you two might know?
So we're category agnostic. I mean, we are interested in everything. I mean, we've backed a company that's building counter drone solutions for like SOCOM. And then we've backed, you know, SaaS companies, supply chain logistics companies, a biotech company, like
fintech company. I know. Yeah. Yeah.
We lean heavily on our network of category specific folks that we can say, look, we think we've got something really interesting here, and we'll share our diligence doc. And a lot of times we'll have, you know, one of our LPs. You've jumped in a number of times. Our LPs are really involved. We have 90 LPs in our second fund.
You're literally crowdsourcing, if you will, through your accredited investors.
But by and large, like 95% of our decisioning is like, are these dogs, right? But 5% is like your venture box checks, is if it works the way we think it might, could this return the entire fund? Is this a space that we think is going to have legs going into the future, et cetera, et cetera? Almost every one of our teams has changed dramatically. The memo that we write for our LPs is like totally indefensible a year later, right? At this specific stage, the thing that doesn't change is extraordinary companies are built by neurotic, and I mean that affectionately, like completely obsessive founders that are working extremely hard and are willing to make those like painful but obvious decisions that other people may not be able to make, like the sunk cost fallacy. Like you can't have that, right? That's what we're diligencing is like, is this the type of founder that's going to figure it out despite knowing that they're going to experience 10, 15 false summits, even in the next like 18 months past, their first investment.
Well, to your point, because you're the dog idea, the get after it, there is the old jockey your horse, as in the jockey's the entrepreneur, the founder, the horse may change. I imagine you see that quite a bit too, to your point, that the people tend to be using this word pivot, which is overused, but the idea that this founder is going to see use case A ends up not being the end game. Do you see that all the time? Is that some of the time?
We see it all the time. What you don't want to see is a team that's like trying to ram a square peg in a round hole.
Not reacting to any of the feedback they're getting. Right.
What you want to see is a team that comes in and they're like, hey guys, this isn't working. We're completely pivoting and we're going to do this. And it's like, great, that's perfect. Go.
Yes. Don't stop. Keep going. Right.
Yeah.
Test, iterate. I know this is like far afield. I feel like I'm missing an opportunity here, given we're recording on day 3 post Liberation Day, as our president wanted to call it or wants to call it. But I know and I'm going to actually tie this to Bitcoin. We're not going to talk, we can talk tariffs if you want, but I feel like everyone's got an opinion and we know what they're worth these days. But relative to Bitcoin and your view of, and even stable coins and the administration, talk a little bit about, I know it's like not so much far afield from Brickyard, but I know it's a passion of yours and you're a believer, as they say. So here's a chance to tell us why you're such a believer.
What do we have? We have 3 more hours in the podcast. No,
as long as you want. I told you before, I'm no Joe Rogan, so I can only keep you for so long.
No, man. Yeah. I mean, Bitcoin is something that has become extremely important to me personally. I've been in Bitcoin since about 2015 and very heavily since 2020. And really, it's really not about Bitcoin. It's the concept of sound money. Money is something that is plaguing the entire world. Like when I think about what we're doing as capital allocators, our hurdle rate is the S&P 500, which is 7 to 10%, nominal growth year over year. But if you think about back to the year 2000, so 25 years ago, the S&P has grown about 7.3%. It's like a 7.3 CAGR. Okay. Well, the money supply for USD has grown 7.2%, right? And so nominally, like I feel like the venture world is very stuck in this mindset of like, we are producing a nominal return that is better than the hurdle rate, right? But my hurdle rate, personally, I'm fully allocated to Bitcoin. I don't hold USD. My hurdle rate's a 60% CAGR asset, right? And so how I have to think about allocating my own capital, is this going to be a better move for me to buy my wife a really nice pair of shoes today? Or do I want this lake house? Or like, it has changed the way that I personally allocate capital. And I think that Bitcoin is going to play a significant role in the venture world going up through the next decade. And you're going to start seeing LPs understand that the hurdle rate is not the S&P. It's this asset that's repricing the world. I'm very interested in finding ways to combine the traditional venture model with some sort of a Bitcoin strategy. Just to touch on it real quickly, this is just hypothetical, but let's say I allocated 10% of my next fund to Bitcoin. And you're going to say, okay, well, why are LPs going to give you money to put in Bitcoin when they could just do it, right? And the first answer is 1, you probably won't. And then 2, even if you did, do you have enough conviction in this highly volatile in the short term asset to stick with it, right? But let's talk about the fund returns. Let's say we allocate 10% of our next fund to Bitcoin. Let's say over the next 10 years, its 4-year CAGR goes from 60%. Let's just say it goes to 20%, right? I don't think it's going to, be discounted that far in any real scenario with the pervasive acceleration of money printing that's going to have to happen. That single allocation on a 20% CAGR, 1.5x my fund. So when every other fund manager is trying to claw from 0 back to 1, and 50% don't, by the way, right? I'm starting at 1 and I have 90% of my remaining capital to do my job.
Is it literally, you look at it, okay, they won't, volatility, stick to it, just even do it. But it's a hedge on fund return is what you're sort of making the case. Yeah. It's almost like you're buying a CDS insurance on the fund return.
It de-risks the entire asset class of venture capital. And we may see, okay, let's say the next decade looks similar to like the 70s where we have pervasive inflation, right? we're going to have 3X funds that return less capital to their LPs in terms of buying power than they took for them from them 10 or 12 years ago.
Fair.
But they're going to be like, we're a 3X fund, we're a top decile or quartile fund, et cetera. And they're not actually providing more buying power to their LPs. Personally, I'm a Bitcoiner and I understand the concept of sound money. And I believe, Bitcoin's going to reprice the world over the next 20, 25 years. I think the funds that get ahead of that and just have a Bitcoin strategy are going to change the risk profile of venture altogether.
Well, take me back to 15, because you said you were in it 2020 heavily, but 15 a believer. I personally was not, partly because I said that who needs this? Anonymous, so criminals, money laundering, Silk Road kind of stuff. What was it that you said, or was it just being speculative and being interested? Maybe it's just intellectual curiosity, but was there something in 2015? Because to your point, money printing, yes, it's always been a thing for the US. Of course, the Fed can always do it, or buying treasuries. But what was your aha in 15 and what made you double down in 20?
So I got into it. A friend of mine who's a founder started a company called iCracked, which was the iPhone repair managed marketplace. We were at an event and he was like, listen, I've been really interested in this world of decentralization. And I think you should start learning about this thing called Ethereum. And so it was actually Ethereum that got me initially into crypto. And as I started going down the rabbit hole, I started mixing out of Ethereum and I came to the understanding that Bitcoin is really the gold and the rest of cryptos is like the alchemy. You can only create absolute scarcity once. It's like electricity. And so by the time 2020 rolled around, had a liquidity event from Bellhops in late 2019. The Dow was at like 30,000. We were 12 years into a bull run. Like it just didn't feel right to allocate it. I got super duper lucky and I was just sitting on cash when the crash happened. And I ended up putting a pretty big chunk into Bitcoin along with a bunch of other blue chip tech stocks and some other things. But when Bitcoin ran in the last cycle, it went from like 10% of my, net worth to like 50% of my net worth. It started this, like, talk about neurotic. I felt very overweight in this thing. And so I started trying to defeat it. And so for like 9 months straight, I went into monk mode. And it was like, I listened to every podcast, read every book. I was traveling the country, talking to some of these OGs in Bitcoin. Like, what am I missing? And over the course of like a 10-month period, I really understood Bitcoin for the first time.
You played red team and you just couldn't get there against it. You're wrong.
I couldn't defeat it. The rabbit hole continues to get deeper and deeper. Yeah. And so, Bitcoin is a proof of work protocol. And what's so sort of almost allegoric is that there's a saying in Bitcoin, you get Bitcoin at the price you deserve. Like you have to do the work. And it's like 100 hours before you really can sort of understand the first layer of why it's so important. And now, I think it's the most important technology humanity has ever discovered or created.
So you're putting ahead AI, or is that changing right now as we speak?
This is my favorite subject. We would not have modern day AI if we had not created the GPUs to mine Bitcoin. AI actually, in a weird way, came from Bitcoin. And so the way I actually look at Bitcoin and AI is they are two sides of the same coin. And so on one side of the coin, you have infinite productivity, and that's AI. That is these nuclear power plants of buying power that get better at doing things more efficiently every year, right? But it's like a 10 megawatt power plant, right? But it doesn't matter if you're making 10 megawatts of electricity if you can't store it, right? And so all that power is being pumped into a money that's just being devalued. And so what Bitcoin represents is the other side of the coin, which is absolute scarcity. And so the two things would never become what they can be for humanity without each other. If AI didn't have Bitcoin to pump its buying power into, humanity would not benefit as much.
You're arguing we wouldn't get the byproduct because the dollar is being devalued. Okay.
Exactly. And then conversely, if Bitcoin didn't have AI pumping all that power into it, then it would never be able to be the battery that humanity can use to be better allocators of capital. And so we're kind of in this stage, and we go way deeper on this, but like we're in the stage where all the Fed has to do is maintain a 2% inflation rate. And it doesn't matter, like productivity wise, we're like 4% more productive each year, the US economy. Well, that's about to go to 6 to 8 to 10 to 12, right, with AI. But all they have to do is just maintain a 2% inflation rate. And so they're stealing all the gains that we should be experiencing in prices. But like, hey, we're only inflating by 2% each year. So they're stealing the gains plus 2% on top. And it's like the USD is the best fiat money on earth. We're the Titanic, but we all know it's sinking. And we look off in the horizon and we see the Russian ruble, but we're not going to jump in the icy waters to swim to that boat because they're further in the water than we are. And we're not going to go to the Chinese yuan for the same reason. We're not going to go to the Turkish lira because they're at the bottom of the ocean. But 15 years ago when the white paper was written, this boat pulled right up next to the Titanic that is verifiably indestructible. And you're having a few people jump in the waters and go climb into the presidential suites over there. And now we're seeing the institutional capital get involved and like it's all happening right now. So AI and Bitcoin is like this divine gift to humanity in the fact that they're both coming to the mainstream at the same time. And they are both accretive to one another.
Interesting. And then I like your, they're two sides of the same coin. That was a nice little play on words there. You might need to actually copyright that. Look, we're talking, like I said, I was joking about a few days after Liberation Day. I told you I wouldn't put you on the spot because we know what predictions do will be wrong. Tell me how, if you have a theory, how do we land this plane, this tariff plane? One guy's, the hair's on fire. Another gal is like, it's going to be fine. Even though no one's really clear what the plan is. You could argue Besant's one of the smartest guys on earth and he's in on it. But tell me about, do you have a theory? Are you kind of in the camp of this is needed versus, oh my God, we just jumped off the building with no parachute?
The way that I look at it is we either started bailing water or we just rode this thing to the bottom, right? A calamity is going to happen. A calamity is guaranteed if we choose the path of like, let's just continue. And so my view is I'm putting a lot of hope in Scott Bessent in that he is going to be able to provide some fruit with this. And I hope that we're able to do it and we're able to onshore a lot of our manufacturing. Like one interesting thing that I actually posted on X about yesterday was the US gave away its production of goods long ago, right? And so goods is no longer an industry. Producing goods is no longer an industry. We are a nation that produces services.
Services.
Right?
We consume and we provide services, 100%.
But what is AI doing? AI is going to completely demonetize services. And so we have no industry in the future with AI. And so we have to bring the goods back.
Yeah, the labor back.
We got to bring the labor. We have to start producing real things because the price of producing services is about to fall through the floor. So I think our debt situation is very bleak. And I don't think we ever get to the point where we begin to pay back this debt. I hope that we can balance the books. But, we have 36.5 trillion in debt and we have another, 80 or 100 trillion in unpaid obligations, Social Security, Medicare, et cetera. And nobody wants to talk about any of that stuff. So even if we can get into a surplus, it's like we're never paying this thing back.
Yeah, the win would be, stop, like you said, stop taking on water.
Right.
All right, to wrap this up, the journey is amazing. Operator now helping others build and being right there with a support system to just help on day-to-day tactical stuff. I love that. You've got this experience you've accumulated and still a really young guy, which is pretty awesome. I like to ask the question in the context of, if I knew then what I know now, not that you have any regrets because everything's learning. There's no regrets. You just keep going forward. But what lesson or two, if you have one, that you would share with your younger self?
What I love to tell kids coming out of college is you should front load all the risk that you're going to take in your life in your 20s. And it's really hard to get caught up in like, well, my buddy just got this, high paying job in Wall Street and he's making 250 grand a year. And I'm going to go start this startup and I'm going to make like 50 grand a year. That feels like you're losing.
Yeah. You're falling behind. Yep.
You're not. Like your 20s are front load all of that risk. Cause I promise you that guy that took the $250,000 job, he's going to be making $500,000, $600,000, $700,000, et cetera. But he's on a predefined course all the way to retirement where he's going to be under the thumb. Right. And so if there is a way in today's day that you can figure out how to create financial independence, time independence by taking a risk on yourself, the benefits of that are incalculable. So front load the risk.
I love it. It kind of ties to your Bitcoin example. You're living your own lesson, which I think not everybody does. So in many ways, you're saying to yourself, I wouldn't change a darn thing. I may even take more risk is what you're really telling me, which is pretty awesome. But it's true. It's funny because I want you to have the last word, but my son just did an internship. He was all excited, going to work. He's graduating college. About 3 weeks in, he's working his butt off, wants to show that he's got the grit, the dog, as you would say. He's like, Dad, this is like working out, go to work, come back, have dinner, go to bed, do it again. I'm like, 40 years? Now you want to know why you want to be your own boss. So
right.
That's awesome. Well, look, I think there's clearly a follow-up on where this whole ship landed or plane landed with the tariffs. More Bitcoin lesson is always desired, but as importantly, I want to put a shout out to anyone who's listening. Look up Cam Doody and Matt Patterson, Brickyard. They're doing some really cool stuff in Chattanooga, Tennessee. I'm personally a big believer. And frankly, without them, there's no ecosystem for Edison to do what it does. So Cam, as always, best of luck. And if I can help, you know where to find me.
I do. You're the man. Thank you so much,
Thank
Chris.
You. Have a great day.
You too.
Thank you for joining this episode of Electrifying Growth. A special thanks to this week's guest for sharing their time and insight. For more resources, inspiration, and a look inside the Edison Partners Network, sign up for our newsletter at www.edisonpartners.com. Click on the Stay in the Know button in the top right corner of our webpage. Thank you again.